Good morning, good afternoon, good evening, wherever you are in the world. This is a FIDIC webinar program. Delighted to welcome you to this particular webinar, where we are talking about the essential requirement for managing consulting contractual risk. This is a big subject for FIDIC and it's a big subject for our industry. And I'm delighted that we've got so many qualified people to help us to have the conversation today. I'm delighted, to welcome a lot of good people around the world. We've got people from Australia, from the United States, from different parts of the world. It's a fantastic opportunity to have this. Yes, I know wherever you are keeping safe. Haven't just gone through Easter holiday. We are expecting quite a lot of people to join us this particular session. I have to be careful not to say morning or afternoon or evening, but it's a delight to have you all joining us. My job this morning is really to help to moderate the session. So without further ado, I'll move on to the next slide. You probably know this particular webinar is hosted by our Risk, Liability and Quality Committee. In our usual manner, there will be more coming up on the 10th of May by another committee. And then we've got our State of the World report on the 23rd of June and should be operating our contract users conference for 11 to 20 of May. And that should keep everybody excited from Africa, from Asia and North America. Next slide, please. What do we have ahead of us? It's a very quick poll. I know that we've got quite a lot of people who are joining us, so we need to be patient and make sure we have as many as possible people online before we start the poll. The first poll that we put across is straight question. Which of the following is true in your experience? This is looking at the subject of risk and liability. Question is, which of the following is true? Most clients require that consultant undertake fitness for purpose obligation for rendering consulting services, or reasonable skill and care in commonly accepted standard for consulting services, which is acceptable by clients. I think if I'm allowed to vote, this is time for everybody to vote and to give us your view. And hopefully this will be able to show us the results in a bit. Just as a matter of background, we have over 1,000 people that register for this particular webinar. We expect at least 50% of that to happen in case. People from different parts of the world. I understand United States are top on the list, UK top on the list, number 2, India, followed by United Arab Emirates and China, and South Africa, go on to Saudi Arabia, France and Turkey and New Zealand. So the number of people from different parts of the world is exciting, which is typical of FIDIC activity. We are a global organization representing consulting industry. So at this point in time, can we get the result of the feedback, please? Right. It seems to me we got 58% say reasonable skill and care is commonly acceptable standard, but quite high standard of 42% is asking for fitness for purpose. This is really interesting. This should open up our conversation. So thank you very much, Liz, for that feedback. At this point in time, I suspect my interest really is to introduce you to our president, Anthony Barry, who is in the evening in Australia. So Tony, the floor is yours to share your thought on the subject of risk and liability as is the impact. Bear in mind the 3 topics we are covering is about limitation of liability, fitness for purpose, and indemnity and insurance. So Tony, the floor is yours.
Thank you, Nelson. And I'd also like to extend my very warm welcome to you all on what is a very challenging subject for our industry. I've been in the industry 40 years, and reasonable skill and care was at one time the standard. That has long since changed, particularly in the part of the world I come from. And tonight we're going to have some great speakers address the issues around fitness for purpose, limitation of liability, and indemnities. The old term, the standard of care, which might reasonably be expected of a consulting engineer, had meaning in our courts, had been interpreted many times in favour of the consulting engineer, even though something had gone wrong on a project. The last 30 years has seen the development of new forms of contract between consulting engineer and client, and also in terms of the implementation of major projects. Those contracts have more and more become bespoke contracts in many areas, with very specific clausing developed to ensure that liability is apportioned to parties involved in the projects. The clauses are often very complex and the issues very deeply ingrained in corporate culture in the particular countries in which the contracts are being drafted. But it does present a very serious challenge for engineers, and the liability we face has increased dramatically. And that exposure has taken us to a point where procuring professional indemnity insurance is expensive, in some cases not available under reasonable terms, and has caused some consultants to move to a very strict management regime and put a significant surcharge on their fees to enable them to manage these liabilities throughout their contractual experience. So tonight, you're going to hear about three of them: the indemnities, the fitness for purpose, and the limitation of liability and their impact on insurance provisions. So I welcome that. I hope you will get something out of tonight and find some learning in what we're about to discuss. From FIDIC's point of view, we would also like to understand from an industry perspective where we can best place our further work to assist you in this great challenge. So thank you very much, Nelson, and back to you.
Thank you very much, Tony, for that. Welcome, Uncle, giving us an insight to your thought on the subject. For those who doesn't know who I am, which is very dangerous to assume, I am Nelson Ogunshaki. I'm the CEO of FIDIC, because we do have people all over the world. We're asking who is this guy that's speaking. But moving swiftly on, the subject, as Tony talked about, is really a 3-in-1 subject. We are talking about limitation of liability, fitness for purpose, and indemnity and insurance. Tony talked about 30 years, how the industry has changed and how industry are responding to that market. I, as a practitioner for so many years, always have this issue to deal with. But this issue is not just purely to do with the consultant, but also to do with how our member association having to advise the member. We need to look at it on how the client is thinking about it, how the insurance market looks at it, and more important, how do we actually act as FIDIC can respond, as Tony said. So it is with that I need to introduce the panel. Next slide, please. We're really privileged. Not only do we have the president, but we also have the vice president. Luis Villarreal Alonso, who will be joining us towards the end. He's actually one of the panel. But the panel that I have is made of 6 eminent people, and I'll start by going through them, a brief introduction, then I'll call them upon one by one to have a few subjects on this issue. First of all, you have Nora Fong, senior counsel at Arup in UK. We all know who Arup is. They're all over the world, one of the best consulting firm in the world. So Nora is the chair of the Risk and Liability Group. She's going to share with us in a little bit about, the 3 papers, but maybe set the scene by looking at the 2 papers that we published before then. Michael Earp, who's sort of a leader within Aon for architect and engineer practice. He's going to share with us the insurance perspective on the subject. Then we've got Nicole Georghagen, which is ex-general counsel of High Speed 2, which, as far as I understand, is the biggest project in Europe, possibly in the world at the moment. And Nicole will share with us her perspective from client point of view. We've also got Doduna, our legal counsel, who will probably lay down the rule on the standard practice and what we should be looking at in the industry. We'll be delighted also to have Nicola Grayson, who is the CEO of Consult Australia. Nicola was past chair of this particular group, did an excellent job, and hand over the baton to Nora. So I'm glad that we got Nicola to give a perspective. But her view is not just Australia view. She'll be looking at it from the point of view, what should member association do to advise their members on how to protect their interests. Then we've got Chloe Halloran, who is from Slaughter and May, from United Kingdom. She will also share with us our thought on how the client perspective sees it. So with that in mind, it's my delight to introduce Nora to take the floor. And I've asked Nora to do a very brief session, maybe 5 or 6 minutes, to give us segue back into where we started, the 2 previous briefing notes and the 3 briefing notes that we're looking at. And after that, we walk through the number in 2, 3, 4, 5, 6. So Nora, the floor is yours. Thank you.
Thank you, Nelson. Hi, everyone, and welcome to today's webinar on essential requirements for managing contractual risks. Now, as Nelson mentioned, the Risk, Liability and Quality Committee has been appointed by the FIDIC board, to support the industry, the consulting industry, in navigating these thorny issues of risks and liability. And one of the ways in which we've done this is by drafting and publishing a series of briefing notes to highlight those issues which face consultants. Now, Nelson has alluded to that already. We've had a couple of briefing notes that have been published, and with a few more coming soon, shortly after this webinar. But our very first briefing note really sets the scene on why it's really important to introduce good contractual governance. So if you haven't had a chance yet, please take a look at that. And it highlights these high-level issues. But what it boils down to is that one of the key issues that consultants face is a significant change in the PI market. Tony mentioned that earlier, and the current challenges in this market are down to a variety of reasons, including things like limited capacity, increasing premiums, stricter coverage exclusions, and really a greater scrutiny of what underwriters consider acceptable risks. So how consultants manage their contractual risks is a vital component of this. So really, following this introduction within the briefing note, the committee is focused on some key areas, which we're going to talk about today. Standard of care, and what sort of standard they should exercise in the performance of their services, importance of limiting the liability, the introduction and imposition of fitness for purpose obligations. And it's quite interesting from that poll earlier, Nelson, that it was almost a 50-50. So it's quite a worrying trend as I see it. And then lastly, the risks surrounding indemnities. And I'll deal with these very briefly in turns. As I said, there's a series of briefing notes which will explain these in more details. And obviously the panelists are here to talk about these matters as well. So two of the subject matters are interrelated. One often sees a discussion about reasonable skill and care alongside that of fitness for purpose, which is why we decided to publish two separate notes on these. Now, as you know, the standard by which professionals are judged, reasonable skill and care, is long established and very familiar. But consultants often find themselves being challenged by clients to accept a higher duty, that which is akin to fitness for purpose. And this makes it much more likely for consultants to be in breach of this duty because they're asked to accept an absolute obligation or a much higher obligation in order to achieve a specified result, and a breach of which does not require negligence or even, well, does not require proof of negligence. And this is problematic because it could lead to higher claims, more successful claims, and ultimately increased insurance premiums. And from our perspective, it's certainly not in the interest of consultants, but we also don't think that it's in the interest of clients either. Now, some clients may feel that it's a way of passing risks down the supply chain to ensure a particular deliverable. The reality of the situation, however, is that the application of judgment, particularly when consultants are looking to resolve a problem in a truly innovative way, when exercising reasonable skill and care, and that judgment, it will then be exercised in a much more conservative manner if they have, if the contract includes an obligation to ensure a particular outcome. And for this reason, they will stick to tried and conventional methods. So the fitness for purpose briefing note really provides a short guide in highlighting what the issue is and how consultants can approach these kind of obligations. Now, if a consultant finds themselves liable under a contract, then one way in which they can limit their liability is by including a financial cap. The briefing note on limiting liability looks at what these clauses are intended to achieve, as well as looking at some of these restrictions with regards to some of these clauses. Now, we're finding that whilst the principle of a financial cap is becoming much more commonplace, exclusions to those caps are becoming much more problematic and very lengthy, actually. So we'll take a look at limitations, and then finally we look at indemnities. This is a pretty complex area, and we've tried to distill it down to a short note. But essentially, it's a common way in which clients transfer risks to consultants in relation to outcomes which they believe consultants can control or prevent. It is a concern for consultants because unless it's been specifically included within a financial cap, a consultant's liability under indemnities will essentially be unlimited. In addition to that, they could also expose consultants to uninsured risks because they give rise to losses which may or may not have been caused by the consultant's negligence or breach. So from a personal perspective, as an in-house lawyer in the Arab legal team, these issues crop up time and time again. And in the UK, the publication of the Construction Playbook by the Cabinet Office is encouraging because it recognises the importance of appropriate risk management, as well as the allocation and creation of sustainable long-term and collaborative relationships within the supply chain. And we really do hope that these principles will find themselves into public sector contracts. However, now that the contractual framework remains challenging, and I've certainly find myself and a large part of my professional life in dealing with these issues time and time again. But I sincerely hope that as an industry, we can discuss these in a collaborative manner. And I think the more we can get a better understanding as to how we can bridge these gaps, the better it will be for the industry as a whole. And I'm sure that the lengthy negotiations we all spend on these issues is not costly only to the consultant, but also to the client. And they really do detract from the real reasons why consultants are appointed in the first place. So I hope that this very brief introduction, Nelson, I'm hoping it's quite brief, has whet your appetite and will spur you on to check out the briefing notes, which will shortly be published after this webinar. I also hope that it'll provide you, or it has provided you, with a brief context as to why these specific topics have been chosen. However, you'll need to bear in mind that there are local laws and customs. So if you do have any questions, please do contact your local member association. We have a large number of panelists this morning representing the insurance sector, clients, the lawyers, as well as representatives from consultancy associations. So I very much look forward to hearing their views on some of these things and to discussing them with them a little later on. Nelson, back to you.
Thank you very much, Nora, for that quick insight into the 3 papers, including the 2 papers prior to that, which has given us opportunity to debate the issue. As you correctly said, we have quite a lot of people, experts, around the table who can join us in this conversation. Can I just, pause for a minute and let people know we've got close to 400 people who are already online. I did say we have 1,000 to get, 400 online. Life is quite serious. So we just need to put it, the pace where we're going to go through is I'm going to invite each of the panelists to air their view on the 3 papers, and we should try and finish that on the hour. At that point, I will then, open up the chat room. So for those who feel that they want to put question across to the panelists, please prepare your question and put it into the chat room, and we'll pick that up on the hour, and we'll spend about 20 minutes to do a bit of Q&A. And after that, we'll do a wrap up. So thank you very much, Nora, for that introduction. Now, it is my pleasure to introduce Michael Up, who is the lead, practice leader within Aon for architect and engineer, a veteran. He knows the market very well. I hear the word insurance market. I hear the word the market is hardening and how the market is changing. So, Michael, you are a member of the Risk, Liability and the Quality Committee, and you've actually cited this paper. I just wonder whether you can give us your 2-3 minutes pennies worth on this subject, and from your perspective from the insurance market. Michael, the floor is yours.
Yes, good morning, everyone from the United States of America, but you'll probably tell from my accent, I come from a little bit further east. and I've had experience in arranging professional indemnity or professional liability, as it's called here in North America, for some 45 years in various areas around the world. Tony Barry, the president, and Nora referenced the insurance market and the difficulties in obtaining professional indemnity insurance. Before we go into that, I want to give you a bit of perspective. The insurance market had a soft period for 10 years up until 3 years ago. So there were 10 years of rate reductions, and there's only been 3 years of rate corrections. The rates for professional indemnity now are still lower than before the global financial crisis in 2008. Since that time, claims have got bigger, and the reason the rates are going up is because underwriters are losing money. They are correcting as far as they can, as judiciously as they can, but they are being also regulated by Lloyd's and other parties, and they have to make money. They cannot underwrite consistently below the cost of insurance pricing. So therefore, that's where we stand, and it is a bit of a push-pull situation at the moment, with the market trying to be more insurance market being conservative, whereas we are seeing owners, possibly here in the United States, because of the infrastructure bill, the funds from that, giving them the whip hand. There's something similar in Canada, and also with some major projects being envisaged in Europe. Owners believe that they should be getting more for their money, and in that way they're trying to push down risk to the architects, engineers, and also contractors. Unfortunately, this is at the same time when the insurance market is going in the opposite direction. And what I think we are all concerned about, that is the obligations that are being imposed on the architects and engineers, at the same time as coming when, as I said, there could be a gap in the market and creating what's called often over here, a stranded risk. So it's very important to look at the 3 briefing notes and the advice that goes in there, because if you are not putting something that is reasonable in the contract, the insurers have an exclusion, which is contractual liability exclusion. Means if they say, well, no, you signed up for something that you shouldn't have signed up for, we're not going to cover you. So I think that, insurance should be looked at secondary to the contractual obligation. As I said to a colleague recently, the difference between insure in a project and insure in an insurance policy, the difference is very, very different. So I think that is something really important to consider. Also, I think we have to explain to owners that perfection is not insurable. I'm not going to go over the point that Nora just made, because absolutely you are setting yourself a higher standard, which is sometimes maybe subjective and not measurable at law. So I think from an overall point of view, Nelson, I believe that's my 3 minutes or so. I'll hand back to you and hear from the other panelists.
Thank you very much, Michael. I think your position on the current challenges in the market and how the market is changing is interesting, and we can come back into that. But before I bring Nicole on, can I have you back on, Michael? Because one of the things that is quite important is the basic definition, of this issue by indemnity. Sometimes people find it difficult. So, in your mind, what is an indemnity, and how does it work, and why is the subject so important to consultants? Okay, from your point of view, Michael, can you address that issue?
You mean indemnity, indemnification clauses? Yeah, absolutely. Well, I think Nora summed it up is that if you give an indemnity to someone, you are basically opening yourself up to all sorts of liabilities. And is the indemnification you're giving, is that going to be judged by the normal rules of an architect and engineer, such as reasonable skill and care? And it's really important that if you give any form of indemnification, that you're saying, look, the indemnification is only given for our professional services, which are insurable under our insurance policy. Secondly, the indemnification is only as a result of for what you, the person you're giving the indemnity, may become liable for. And one of the difficulties with that is if you give an indemnification, that person would still have to actually defend an action before that they could recover anything from the architects and engineers' own insurance policy. So much so that underwriters, particularly here in the United States, are saying we will not provide indemnification clauses under policies unless there exists already a written document. So therefore, you cannot give indemnification to someone that you're not already in contract with. And that's been a bit of a change over the last few months or so. And also underwriters are saying, well, you're opening up the number of people who could be bringing an action. Therefore, I'm going to charge more premium for it. So something that people may say is should be an easy ask in the contract is now becoming more difficult, which is back to what Nora was saying about the exclusionary language coming into policies. So I think it's very important you understand who you're giving the indemnity to, that you already have a contractual liability, and it's very specific.
Thank you very much, Michael. I think you've just addressed that question. I think it's important. At this point in time, I'm going to invite Nicole to join us. Nicole was immediate general counsel of High Speed 2, which I believe the stage 1 was close to 50 billion and is still halfway through. And there's a lot of work to be done. But I do remember the last time we had Nicole on in one of our programs, she was saying to me, as a result of technology and the COVID, they actually let contract of 1.2 billion all online, digital. So Nicole, can I bring you in? From client perspective, what is your view on this paper? You've seen the 3 papers, and can we have your thought on the subject?
Yes, of course, Nelson. Thank you, everyone, for having me, and welcome wherever you're joining from. So it's worth saying that I think I'm near 25 years in the construction industry now, and I've worked for clients, contractors, and consultants. So I know all the different perspectives on these 3 topics. But Nelson has asked me today to focus on the client perspective, given my last 6 years at HS2, which is an enormous project. And that will come through in some of the comments that I make about these topics in the next few minutes. So before I speak directly about the indemnity, fitness for purpose, and limit on liability topic, I think there's 2 general points that need to be made first about all of those matters, and they've been touched on already by Nora and Michael. Firstly, this is all about effective and efficient risk management. So if you're a consultant who frequently needs to bid for projects, you know that if you price an excessive amount for risk in what you bid, you won't get the job. And similarly, if I'm sitting in the shoes of the client, I've only got limited funds to pay for the job that I need to get done. So I can't afford to overpay on the basis that I have put too much risk back on the consultant and into the supply chain. So actually those 2, that sort of first general point, those 2 factors are linked, all about effective and efficient risk management. And the second general point I wanted to make is that context is everything to these 3 topics. They're actually quite difficult topics to talk about without knowing the particular circumstances of the contractual environment. So for example, in the case of HS2, we had an insurance policy that helpfully was taken out in a time when the market was quite soft, and that policy covered all of the project and its supply chain in relation to certain risks. So if you've got a scenario where the client is providing certain insurances, that's perhaps going to be a quite different scenario to the scenario where you yourself as consultant are being asked to put certain insurance forward. So just remember, what the insurance scenario is, what the cost model is for the project that you're working on. Is it an actual cost model or a lump sum cost model or something different? They're all things that are going to impact on these 3 topics. So if I turn now to the three topics, again, just focusing on the client perspective, as Nelson has asked. So if I talk first about indemnities, look, the client perspective on this topic is this. The client will employ a consultant to do a task. And if that consultant doesn't do the task to the standard that the contract requires, then I think the simple perspective of the client is that the client shouldn't suffer as a result of that. Now, you've heard Michael and Nora both say that in the, let's call it in the ordinary course, the law will impose certain constraints on what the client can recover. Well, the client's perspective on that is that if it has been caused a loss by poor performance of the consultant, then why should the client be the one that bears those losses? Now, if I focus again on HS2, HS2 is a project that's been funded by the UK taxpayer. So actually, if it's not the consultant who is going to bear those losses of its poor performance, then ultimately it's the UK taxpayer bearing it. So you can see when the project is a taxpayer funded project, that whole conundrum about risk allocation becomes quite challenging. So that's the client's perspective on that topic. But in the same way, HS2 had no interest in creating an environment for any consulting business that meant that business would be unsustainable. So while HS2 did regularly seek proportionate indemnities from its supply chain, I'm very happy to say it was also very happy for those financial exposures to have a cap, a limit on liability, just as Nora was explaining earlier when she was talking through the guidance notes. It, like I said, it's not in HS2's interest to have a supplier that was going to go into administration, go into liquidation, become financially porous as a result of the contractual risk that it had signed up to. And that position on limits on liability, or LOL, as we used to call it, it was fairly typical. And I might sort of explain what was typical. It was typical to exclude altogether any liabilities for loss of profits, for example, business interruption, those sort of, let's call them consequential costs. So that was, HS2 accepted that position. And it was happy to cap the consultant's exposure at a certain financial number. However, it was also very common for HS2 to take the position that there are certain types of losses that were not to be capped. Now, I know that the guidance notes that FIDIC has produced has touched on these things, so I won't go into them in any depth now. But clearly, if there is going to be a cap on the consultant's exposure, it's very important to look very closely that where the cap has certain carve-outs from it, it's very important to analyse those carve-outs to make sure they're things that the consultant can accept, and that they're not going, that they're allocating risk in a reasonable and proportionate way. So, for example, one of the things that HS2 typically would take out of a cap on liability so that the cap didn't apply is insurance recoveries, which is really pertinent to the conversation that Nelson and Michael were just having earlier. The logic in that was that if HS2 was paying for the consultant to have insurance, HS2 wanted to be able to benefit from that insurance if the policy was triggered by any particular scenario. So you can understand a client is sort of not being particularly clever if they pay for insurance to be put in place, but then can't actually use it because of a cap on liability. So that's why insurance recoveries were taken outside of the cap. So that probably brings me to the third topic, fitness for purpose. Look, this one is a real conundrum, everyone. So again, speaking purely from the client perspective, a client would typically, and hopefully, know what outcome it's trying to achieve, what its objective is. But it's very unusual for that client to be an expert in the area of the work that is needed for that outcome or objective to be achieved. And that's how you end up with fitness for purpose obligations in contracts. The client knows what it needs to, the end state, if you like. The client knows the end state. It knows what it wants to do, you know, at the final hour, but it doesn't quite know how to get there. So what it's looking for from its supply chain is comfort that the work that the supply chain is going to do is going to get it there. Now, to some extent, that legalistic debate around skill and care versus fitness for purpose, it is quite a legalistic debate. If you talk to a client, they just want to know that their outcomes can be achieved. So HS2 did, again, just commenting from my recent perspective on HS2, HS2 frequently did allow a change in the standard of care expressed in the contract to a reasonable standard, where it was pretty comfortable that the type of service being provided, that exercising that reasonable skill and care was going to get HS2 the outcome that it was seeking. But clearly, if the client is not willing to make that change, then there are other things that a consultant can do to ensure that its risk is manageable in that regard. And very helpfully, I know the things that can be done are set out in the FIDIC briefing notes that have been prepared. And they're things like checking the scope very closely, making sure there's no inconsistencies in the scope, making sure that if there is an outcome that's specified in the contract, that if it isn't just the consultant who's in control of that outcome, but rather a variety of parties, that the scope very clearly puts the parameters around what the consultant's inputs are. So these are all sort of practical, sensible things, but they are ways that consultants can manage their risk in that regard, even if there is a fitness for purpose obligation. Look, I'm conscious of time, Nelson, so I'll stop there, but I hope that that's been helpful for everyone on the call.
Nicole, thank you very much for that. I think your two starting point is very important. I need to bring that one. You said it's an effective and efficient way of risk management, but we also need to talk about the three topics in the context of what it is that we are actually dealing with. At this point in time, I'm going to invite Doduna, who is the General Counsel FIDIC, just to lay down the role. What is your perspective on the subject? What is your take on it? You know, we've had from Nora, we've had from Michael, you have from Nicole. What's your take, Doduna? Very simple. I just want to have a pit stop. Doduna.
Thank you, Nelson, and hello to everybody. Just to continue on the note of the good contractual governance that we've heard and the effective risk management, I would like to mention a few words about the impact of the governing law while negotiating the terms and also the use of the standard form contracts. Well, managing the contractual risk is important for successful project delivery, and we all agree that. Contracts that provide for fair and balanced risk allocation are well written and understood by the parties, have a better chance to bring successful outcomes for the project and also for the business of each contracting party. And while of course it is open for the parties to negotiate all the terms of their contract, it requires really careful consideration and drafting to ensure that the contract adequately addresses the parties' rights and obligations, is in line with industry standards, as it has mentioned by the other panelists, and is valid and enforceable. And while the doctrine of the freedom of contract will allow the parties to freely determine the terms, there is an established framework of the law that will have an impact on the interpretation of the clauses that I would like to flag now. The law, and especially in the civil law jurisdictions, will sometimes have the mandatory effect. And what it really means that it can determine the limits on the parties' freedom to agree such clauses and also their effectiveness. For example, in most of the jurisdictions, there are the limits on what can be agreed on the exclusion of liability or on the limitation of liability clauses. In some jurisdictions, for example, it is not allowed to change the limitation period set by the statutes. Well, this, of course, brings the issue that it requires the careful consideration and careful drafting of the clauses to make sure that the parties will actually get at the end what they have bargained for and what their what they've expected from the contracts that they've negotiated. Not only the validity, but also the interpretation of the contractual terms may vary depending on what governing law is governing the contracts. What might be an enforceable provision in one jurisdiction may not necessarily have the same interpretation in other jurisdiction. And a good example for them would be, for example, indemnities. While the indemnities in common law jurisdiction may have a different outcome, in civil law jurisdictions it has different effect and is interpreted differently. So just in a conclusion on this matter, it's important to look at what the governing law of the contract is, to see how those contracts can be drafted. And there are the benefits that the use of the standard form contracts may bring to the parties to mitigate the contractual risks. And the reasons for that are that the standard form contracts, and especially, for example, when it's a FIDIC forms of contract, it provides a fair and balanced allocation of risk. And the reason behind that is that doing so provides the best chances of successful project delivery. Its terms aim to reflect common industry standards internationally. As for example, when the FIDIC task groups or the committees are working to produce the FIDIC contracts, they look at different jurisdictions, they look at the standards that are available in different countries to arrive to a common international standards that would be acceptable internationally and should be accepted by the different participants. That's the objective of the clauses. And the other benefits I would also not mention, which is the reduced cost of negotiation, which is also to provide the confidence to the parties, familiarity with the clauses, established interpretation, and so on and so forth. So I'll just finish on this note and pass to the other panelists.
Okay, thanks very much, Nora. I think the point you raised is quite important, that the jurisdiction and the interpretation of law in different countries will have an impact on this. So I think having that at the back of our mind help us to move across very swiftly. Nicola, you are the CEO of Counsel Australia. Now, your background is not just being a CEO, but actually you're a lawyer. But I want you to speak about what is the situation with Australia, and from an MA point of view, but also just put your hat in the role as you are representing the member association all over the world, which is what FIDIC does. What should be their view on this particular subject? And can you share your thought on the subject? Back to you, Nicola.
Thank you, Nelson, and hello, everybody. It's great to be here today to share thoughts with you on these important matters. So first of all, the Risk, Liability and Quality Committee produced these guides so that MAs could really take advantage of the information within them to use that information to help educate the consultant industry on these issues and the traps that lie in some of these contract terms and the consequences that can be very significant to your business and, of course, your ability to insure yourself. So first of all, use the guides to inform. As an MA, that's your obligation. We're here to inform our members. So they're a great tool to use for education purposes. Also, you can take those guides and build on them. So you can look at them and interpret them in terms of what's going on in your own home country and how you might tailor them and introduce some case studies about what you're seeing in your jurisdiction. So it really brings the facts presented in the documents to life by making them very relevant in your jurisdiction. So, so key tip number 2 is to build on the information within them. Obviously, very much encourage your membership, so consulting businesses, to provide these to their clients when they're going into contract negotiations. So this is something I'm particularly excited about, to receive these guides in Australia, so that I can provide them to our members to say, look, you can now say, not only is this information that the Australian Association provides to us, but it is also backed by the International Federation. So it really gives an extra limb to our members, to the consulting businesses, to be able to negotiate with their clients when they're meeting them one-on-one. And then finally, the final tip for MAs is to use the guides for your own advocacy on behalf of your membership. So where we then step in as a member associations, and we're looking to negotiate with government clients and also with private sector clients on behalf of our members, we can take them in and again say, this isn't just the view of the association, but it's backed by the International Federation. And again, that just really gives strength to our arguments. So those are the key tips that I'd provide to member associations, Nelson. And just to reflect on what's happening here in Australia, all of these issues, we're seeing them coming through all our contracts in Australia. I think particularly what's particularly difficult and challenging is that if our members, if consulting businesses are working direct to government under a government contract, the government will often say, look, we'll never sue you. We won't pursue you. We'll always try and resolve these issues. So therefore, the consultant walks away a little bit reassured by that and may therefore enter into that contract under the belief that the government won't sue them directly and they won't really have too much to fear from signing up such a contract in order to win the work. The mischief happens, though, if then that contract is passed over to a contractor to then actually go into the design and build proper or design and construct proper. Then a contractor will not have that same attitude, and they will then pursue and attempt to sue the consultants. And so that's where a real mischief comes in. And that's what we're seeing. Claims by contractors against consultants has increased enormously, as have the size of the infrastructure projects that are in front of us now. And when you get big projects with significant risk, that's where you're going to get disputation. And if you haven't negotiated from a strong standpoint entering into the agreement, it really can come back to bite you later on in the piece. And this is all feeding into, of course, the hardening in the PI insurance market and the issues that we're tackling today. So just to really reinforce what everybody else has said, it's very, very important to look carefully at these contract terms, no matter how nice your client is being to you when they're sitting in front of you. The other piece I think that's very important for us to take away is I do see in Australia a growing misunderstanding of the role of the consultant versus the role of the contractor. The consultant is there to provide professional services advice. That is different from actually doing a build and constructing. For example, you would not ask your barrister to warrant the outcome of your case. A barrister will not tell you and will not warrant that you will win the case. A barrister will give you the best advice they can to help you to put you in a good position to defend yourself, but they will never guarantee that you're going to win. In the same way, under fitness for purpose warranty, why would we as professional services advisors guarantee the outcome of a build that we don't actually deliver? So there's just some thoughts from me and some perspectives from Australia. Thanks, Nelson.
Well, Nicola, I think those 3 or 4 advice are actually quite pertinent, and I'm going to come back to that later, because sometimes we take it for granted. When we have member association around the world and they're asking, FIDIC produced this document, how can I use it? How can it help me? And you touch on it from the point of view, it is a good information, we can build on it. And you can use it for your encouraging and discussion with your client, but more important, use it for advocacy. And I like the point you brought back about Australia, so I'm going to bring that back into question later on. Mindful of the time, can I bring Chloe, from Slaughter and May? Chloe, can you just share with us your thought on the subject, because there's a lot of questions and comments coming through the panel at the moment, which I need to pick up, but just to try and close out this part of the part 1 of the discussion. Chloe, can you take the floor and give us your perspective on the subject?
Thanks, Nelson, and hi everyone, and thanks for tuning in today. We're certainly navigating interesting times, I think, as an industry, and as lawyers, the set of challenges that we face in helping our clients to navigate risk and manage both quality and liability are moving at quite a pace. It's true to say that our practice here at Slaughter May focuses on the employer side of things, but we do also have a number of contractor and consultant clients. We are fortunate that wearing these different hats gives us a broad perspective of the market at any one time. And from where we sit, it does seem as though the last 9 months in particular have been a particularly tricky period. More so, in fact, than the initial period from March 2020, when the first COVID lockdown hit here in the UK. Finding the right balance between price and risk has been turbulent, and we've seen a myriad of solutions deployed to get deals over the line. But at times like this, I think it's key that all members of a project team, and I don't just mean the lawyers when I say that, I mean the employers, I mean the contractors, the consultants, and everyone else that sits in between those parties, go back to basics, and get the simple things right on the topics covered by the briefing notes that will be published shortly. So if we take a step back then, we can see who is really driving the market in these areas. I think the first thing to say here is, and with my lawyer hat on, we get it. I think there's often a perception that employer-side lawyers produce really onerous tender forms. And they're often perhaps the ones driving risk in these areas and the allocation of the risk. But from our perspective, that's not the case. And our drafting should, of course, be based on the instructions that are provided to us. So as we see it then, there are three types of employer in the industry driving trends at the moment. So the first being the type ones, and I would call these the sort of traditional developers and those with a really good industry understanding. We would include the tier one contractors in the UK market in this bucket, and we would also include the top consultants in this bucket. Their day-to-day familiarity with construction contracts and trends in the industry means that contracts involving these type ones tend to fall on middle ground, and they more or less reflect accepted market practice, I think, on the topics covered by the briefing notes. So in our experience, this means an inclusion of a sensible standard of care, both for works and design works if we're thinking about a building contract, but certainly a sensible standard of care if we're talking about a consultancy agreement, an exclusion of fitness of purpose, perhaps save insofar as the selection of materials is concerned, a handful of appropriate indemnities, and an appropriate cap on liability, but with limited and specific exclusions. So that takes us on to the next type of employer then, and these are what I would call the one-offs. Now, they may be large corporates or others whose business may not necessarily centre on construction engineering projects. It may be the case that whilst it's not their first project, they may be dipping their toe into the water for the first time in years. And that can sometimes lead to the employer comparing positions on risk to what may have been achievable, say, 10 years ago. Now, contracts involving these type twos often end up looking nothing like their tender drafts. Unfamiliar territory and a full-scale risk dump on contractors and consultants too often go hand in hand. Indemnities are a great and simple example of this in the UK market. Whilst a few years ago, perhaps longer depending on the type of project, it was common to see a large number of indemnities in a contract. But that market is now, I would say, gone, and it's quite uncommon to agree a large number of indemnities in a consultant agreement in particular, and particularly uncommon to see a general indemnity for breach. This is the case, I would say, at all levels of the commercial construction contract market here in the UK. So that takes us on to our last type of employer then. Now, these are not employers as such, but they are those who sit behind them to provide project finance or other lending. It's often the case that a lender is of the view that no risk should sit with an employer on a project. This results in all risk being pushed down to the contractors and the consultants, or, of course, needing to be backed off with insurance. Now, that's nothing new for a project finance structure, but what is interesting is that we are seeing a large delta between what the lenders want on one hand and what the contracting market can take on the other. It's often the case that our employer clients actually find themselves in the middle. They're happy to concede points on risk and liability to a main contractor or a key consultant on a large project, but those positions are not in turn agreed by their lenders. Caps on liability are a really good example of this. And whereas a lender may require liability to be uncapped or capped at around 100% of the contract sum with significant exclusions, there or thereabouts in the UK market, the market has clearly moved towards lower percentage caps with certain exclusions. Now, I wanted to end by saying that following best market practice for contractual terms will only get you so far, and doing so overlooks the pivotal importance of the scope and other technical documents within a contract. We are seeing an encouraging trend in respect of full-scale reviews of these types of documents by all members of a project team. I think this trend will continue, and from my perspective, should certainly be encouraged and planned for in any pre-contract timeline. So with that, I'll wrap up and hand back to Nelson.
Okay, thank you very much, Chloe, for that. That's interesting because the three types of clients you mentioned and the definition is quite important because that gives us some sight. You talk about, the traditional client, you talk about the one-off, and then the lenders. We can see increasingly the role of the project finance and the private sector, even private equity coming into the market. And the 3 points you raised are quite important. At this point in time, I'm just going to go around and give one question to each of the panelists as quickly as possible before we open the floor out. I do believe, Michael, you talked a little bit about how do we, deal with this? But can we just focus on the consultant side of it? And the question I'm putting to you, what are the challenges really that you have from the insurance perspective in being able to address the need of consultant? I mean, is it a case that, all the points that's been raised here are very much open, because your statement earlier on was giving us an overview of how the market is changing from the soft into the hardening and trying to balance the market. From the architect and engineer point of view, do you see a major challenge coming up that we need to address?
The answer is yes.
Okay.
I think also I must echo the thoughts of Nicola Grayson about the swing towards more design build has meant that those negotiations consultants could have with the owners, and the owner is the final user who wants something to work and be what Nicole says, the expected outcomes. As the owner. And I think the introduction of design build, which is very, very important and very key as a procurement method, that changes the balance of risk. The contractors are different animals to consultants. I'm going to say that in the nicest possible way. And they often view project insurance, single project professional insurance, or even the consultant's own professional indemnity insurance as a form of ATM. I have had a number of projects where the contract's been signed and literally the contractor is putting in claims against that policy 3 or 4 days after the policy signed for errors made by the consultants and designers during the bid phase. So as I was talking about to my colleagues, we were saying that the mousetrap has to change for insurance. And I think the way it's going to change is there's going to be a bifurcation in the rest of the world, which is happening here in the US, or has happened in the US already, whereby what an owner wants from a consultant's professional indemnity, professional liability insurance is very different from what the design builder wants from the professional indemnity insurance. And that bifurcation may involve new products or even insurance having to be duplicated because different people want different outcomes from the insurance. So I think there is going to be a lot of pressure on consultants. I think I was very interested to hear what Chloe said about the employer is put into a difficult situation by the financiers. Yes, I've literally been involved with that, and we've had to speak very clearly to the financiers. Yeah, you're putting up the money, but you're not going to get that insured from insurance. You charge interest on giving the money. That is your risk versus reward. Same token to the contractor. Contractor, you can make a much bigger profit on the project. That's your risk versus reward. The consultant probably makes the smallest profit, yet he's been asked to take on the largest risks. So I think something does have to change.
Okay, thanks very much, Michael. Can I come back to Nicole, please? Because you raised one thing earlier on. You said, well, the client most of the time just wants some assurance, and whether they ask for fitness for purpose is really because they're not experts in the field. And if they have to make sure that they get what they want, this may be one way of going forward. Then on the other hand, I heard from Nicola, and he put it very eloquently to say, well, even though if you're appointed a barrister, he never guarantee you present facts, and he's going to rely in being your advocate based on the facts. So can I just, toy around with this question? Can you help me out? If the barrister cannot guarantee, why will the client be expected, the consultant to deliver fitness for purpose? Nicole, can I put you on the spot on that? Nicole?
Yes, so I think the difference between the two scenarios, although I understand why Nicola raised it, is that the barrister's there to advocate a position that he or she gets. In the case of a consultant who's being employed on a project or a work scenario, the client it's not that scenario. It's not sort of handing over a factual position. In fact, it's the other way around, where the client is saying, I need this outcome. I need you to get me there. I think the secret for this topic, though, Nelson and everyone on the webinar, is to be able to adequately define where exactly the consultant's boundaries are in realistically being able to achieve that outcome. And quite rightly, we've heard other speakers today say, well, you know, the consultant only does this bit, and then the contractor does this bit. And indeed, as we all know, the client themselves has a role in terms of what assumptions they provide, what constraints, etc. So as long as that is adequately defined, then I think the risk that the consultant is taking on is less. I'm not saying it's acceptable, but I think it's less than if those things aren't adequately defined, those boundaries between who is doing what.
Okay, Nicole, thank you very much. Can I bring Nora back into it? Again, I'm using Nicole as reference point. She touched on quite a number of points. So I'm going to go back to Nora. You work for Arab. How confident are you if you get a copy of this briefing notes, which I'm told by Nicola that is a good information to have? And if your MA in UK approach you and say, this is something that is good, how confident are you in tabling this in front of your client to say, look, this is an international document produced by best, people in the world. How confident are you at Arab to use that as a discussion point with your client? Nora?
Yeah, thank you, Nelson. I think it's a really, really good starting point, because I mentioned earlier that it's about having that conversation, and Nicole mentioned, context is important, and I agree, it's hugely important. What we've tried to do with the briefing notes is almost deconstruct elements of a contract. Now, in reality, all these things are mushed together, right? You can't, it's hard to divorce one from the other. But I think it's really useful in saying, look, there is this broader context about how we as consultants manage our risk. It's not something that's just peculiar to Arab. It is something which is affecting all consultants, actually. But granted, we all have different policies. Our risk appetites are different, how we are structured, our corporate drivers are different. So all these things have a bearing. But I do think it's really, really useful in providing that kind of impetus to start having really useful conversations about some of these things.
Thank you very much.
Does that answer your question?
It does. It does.
I think
Absolutely.
I can carry on, but
no, it does answer, because what I'm trying to do, Nora, is get to a point where everybody's got opportunity to respond to some of the issue. Before I open the question to the floor, there's a lot of questions coming through. I see Doduna raised her hand. Doduna, do you want to chip into the conversation before we open the question to the panel?
Nelson, thank you for giving me this opportunity. Yes, I wanted to ask, you asked the question why client would ask for a fitness for purpose obligation and not for the standard of care. And I wanted to reference to the point that I was earlier making about the different jurisdictions and standards. And for example, in some civil law jurisdictions, fitness for purpose obligation is a standard set at law. And in that, when it's an undertaking of reasonable skill and care, it's lower standards. So this is the cultural expectation in some of the countries. So I think that's.
So I think the message you're trying to put across there, Doduna, is that if you don't want to work in that particular country and your risk appetite is not big enough, then don't operate in that country. Because if that's what the law says, that's what the law says. As a company, Nora said, it depends on the culture of your company, your bandwidth, your risk appetite. So, it's not a case that you must operate in that country. So as a consultant, you take a decision. Is that right?
I think, Nelson, it's also important to set the international standard that should be acceptable worldwide in different countries, and for the different part to understand that this is the international standard, not necessarily governed or judged by the law in that countries, but as the business operates, and then in that perspective acceptable because there is the insurance requirements you need to get. So I think the internationally acceptable standard to set, and this is where the FIDIC objective, I think, would come in to see what should be accepted by.
I'm with you. I'm totally with you on that, Doduna. I'm totally with you in that. But at the same time, I'm taking Nora's comment is to say, if your risk appetite is not to go to that country, and the country want to operate on international standard, but yet they want to impose their local issue, you can make that decision. It's part of your risk management. I understand from Nicole, and it's an effective and efficient way of managing. You've got to put it into the context. I'm being an advocate here of saying, look, buyers beware. Don't force yourself into a country where a client turn around to you, I want an international product deliver, but I want to operate on my domain. It doesn't work. You've got to make that decision. So Nicola, come back to you.
Oh, thanks, Nelson. I just wanted to make a quick point, particularly for any clients that are listening to the conversation. I think it's very important that we do stress that these, the guides that we've produced and the information we've been discussing, this is in no way seeking to give consultants a reason not to follow their professional standard. It is, of course, critical that consultants, for the sake of their reputation and the value that they offer their clients, maintain good levels of professional standards. And that's one reason why we exist as MAs, is to help raise the standard of our industry and our profession. But what we're calling out is the fact that a consultant must stand by the deliverables that they give to their client. But where the issue arises is if the client has in mind that they want to see a road there in the future, and says to the consultant, can you guarantee that I'll have a road there in the future? The consultant can say, I can certainly design you a road, but I won't be the one that delivers the road. So I cannot guarantee that there will be a road there in the future, because that's what the contractor does. The contractor gives you the road, but I can design you a road. And if the contractor follows that design, there will be a road there. But as we know, things get manipulated along the way. The client changes the brief, the contractor may override certain design decisions. That's another reason why, again, giving a cast iron warranty against that project is dangerous, because things shift. There are more people involved in a project than just the designer. So designers must stand by their work. That is a first principle, and I think all of us on this panel would agree. Designers must stand by their work, but there is a difference between that and then warranting the outcome of a project. And I think that's what we're trying to get to.
I think I get that, Nicola. You make it very loud and clear. You can design it, but you are not responsible for the delivery of that. And if that delivery is being compromised, there's no reason why you should be, obliged to give that guarantee. Because in that process, that's why the supply chain process is what it is, supply chain. If it's about a case of otherwise, completely different. So at this point in time, I think I've actually, pushed quite a lot. Back to you. Let's pick up question from the floor, and let's have all the panelists visible at this point in time. There's a lot of questions coming through that I can pick up, and thanks, Andy, for putting them through. There's a guy called Marty Jasper. It says, if to limit a consultant risk, it is forcing the consultant to the conservative, tried and tested option. Is it not preventing innovation and new method and technology? Surely there needs to be a balance. So can we have the screen, open, Liz, so that I can see everybody and put the question across? Where does innovation and creativity come into that? Let me just put the question across. A typical client. Nicole, I know you've got fantastic experience across the whole breadth of the whole industry, the contractor, the consultant, but let's go back into it. You want innovative delivery of your high-speed tool or whatever the new project is, and you want to encourage creativity, you want diversity and inclusivity, you want different parts of the brain to work. Does this prevent innovation creep? Because everybody is designed to high standard that you cannot move from. Try and test it. Where does innovation fit into that?
So I think there's two responses to that very good question. I think the first response is that HS2, and I'll comment from the high-speed tube perspective just because it's the most recent. HS2 definitely needed that innovation mindset being brought to the project. The project is so enormous, and without that creativity and skills that the consultancy team brings to a conundrum, clearly the outcomes were not going to be as good. So I completely agree with the gentleman who's asked the question. That balance is super important. The second thing I'll mention, and this is what HS2 did to create a safe space for this topic, is it established a sort of innovation framework. So it would enter into, I'll call them projects, but I use that term sort of in small p sense. It would collaborate with members of the supply chain, almost outside of the core contract between HS2 and a sort of top tier supplier. and it would take these innovation projects forward so that they could get to a proof stage. And then once they were there, they get moved across into industry. So that created that safe space is the term I'll use, Nelson, for that thinking to happen without it potentially contaminating that legal relationship under the, I'll call it the main contract between HS2 and the contractor.
Thanks very much for that. So, for what I call enlightened client, you create a space where people can work, and then when product is being developed, delivered or discovered, then move across into it. So you help
exactly
with innovation. So I
that's
take that
right.
point. Okay.
Yes.
There's a question that comes through to which I believe is perhaps put it on towards to Michael up. And this is directed. It's a question for Michael. Michael, you mentioned in your excellent presentation that you cannot provide indemnification to a party for which you don't have a contract. So my question is, how do you recommend a contractor effectively managing the issue in a sales and pre-award situation, i.e. contract doesn't exist at that point? Do you get the question?
I do, and I saw it earlier, and I gave the gentleman an answer directly, but I think it is worthy of mentioning to the whole audience. Number one, in a pre-sales situation, why would you even consider giving indemnification? You have no obligations. You shouldn't even be considering it. If you want to be, I think prior to any contract, you rely on common law, whichever the common law, wherever you're operating. There are protections for everyone in common law around the world. However, if there are specific issues you want to deal with, there's nothing to stop you putting together a heads of agreement at the pre-sales basis. And the heads of agreement can certainly outline certain contractual terms, obligations that will be enforced once the contract has been executed and agreed. So a heads of agreement is a very good point. But before we move on, I just want to go back to Nicole's point there. What a good place HS2 must be, because professional indemnity doesn't like innovation. They don't want prototypes. They don't want anything like that. In professional indemnity insurance, wants things that have been tested and that can be measured. So I was so heartened by what Nicole said then, and good for HS2. I just want to say that as an ad lib.
Good. Thank you very much. This is my own plug to Chloe. You mentioned, Chloe, earlier on that the new kid on the block is this third client type. The lenders and the financiers, and they come into the market because they have money, but sometimes they are clueless on the sequence of events. And I see it as a chair of investment committee, and I have to go through the whole due diligence process, the technical due diligence, the market due diligence, the political due diligence, and the deliverability due diligence. Question I have is, Nicola said it in her speech. She said, well, the government will tell you, we're not going to prosecute you. You know us. We never prosecute. That it's always issue. You know us. But you have some people within the government department who are risk averse, and they do the front end of the project and they package it. It becomes a design and build. And then from that point, the innovation creates issue, because the relationship you had in the early phase of that contract negotiation is no longer what you have when that contract is going into execution. So I'm asking the question to Chloe, for these type of lenders, do they understand some of those issues, or is it a case that that's government only, or does the private sector don't get the same question? Chloe, do you have a view on that subject? And I might bring Nicola back onto this subject. Chloe,
I think there's a mix in terms of what we see in the market, Nelson. I think there are the funders that are really clued up, and they are used to being in the mix with the contractors and consultants, and they have a really sort of narrow expertise in a particular type of project. And then I think you have sort of another bucket where perhaps what's come across their desk in this instance, and to go back to an earlier point, I think context really is everything here, where they're dealing with a part of a project that's maybe not necessarily familiar to them. There's a part they're not comfortable with. There's a part they think that might affect their return on investment in the future. And I think the best thing you can do there is use your consultants to your advantage in that scenario. really try and educate the lenders as to what technical due diligence you've done, get them as upskilled as possible on that risk, and really sort of try to narrow down and almost put that little piece of risk that they're not happy with in an envelope. And then I think the contractual positions can almost follow from that. Now, as you said, Nelson, the sort of the age-old problem around sort of novating consultants to a design and build contractor, that flip of employer, I think that's always been there. And I think the key thing to remember in that is to take a step back, to really sort of map out the whole project, where the consultants, where the contractors sit, where the collateral warranties might sit, and really think who is best placed and who should properly be taking that risk.
Okay, thank you very much. Nicola, can I bring you back? Going back to the issue of Australian experience, where you've seen this thing happening, the government department said, don't worry, we never sue you. Then it goes into design and build, and then our members or your members then become novated. And sometimes they've got no choice. They have to go on across. They cannot renegotiate. And in most cases, you and I know that the design at that front end is not detailed design. And they're expecting, that you carry that particular level of responsibility on. What has been experience you have from your members in Australia? And is there any lesson we can learn from that and how they deal with that?
It's very challenging. Tony's laughing there. You've probably got more experience and can answer this more eloquently than I, Tony. So if you want to comment, please do. But I think it is very difficult, and to try and renegotiate during that novation period is a challenge. But if we would certainly encourage consultants to attempt to do that and to get onto it very, very quickly. We have actually produced our own practice note on the challenge of novation and what you can do. And it might be something, Nora, we bring to the Risk, Liability and Contracts Committee to look at, maybe a practice note on novation and what to do in that scenario. And perhaps that's something we could put on our list. But I might hand to Tony in case you want to.
Good point. I was going to pull him in anyway. I think he's been waiting patiently to nudge me to come back into it. Tony, you're on the ground, you're the FIDIC president. Let's dip down on Australia first before we into the global. Maybe we can learn from Australia. So, what's your view?
So I have many views, but they're not all useful tonight. The first comment to make is we have a thing called the Trade Practices Act 1974, which became the Consumer Protection Act in recent years, and that includes all sorts of provisions around false and misleading statements. So whatever, whilst you might have a head of claim under common law, you may have one under contract. You in Australia, you also may have one under the Trade or the Consumer Protection Act. And that false and misleading thing means any error on a drawing in a program is a false and misleading statement. And you can be sued absolutely for that, and you can't limit your liability so effectively. It's an extremely complex environment, and it's very different to many other places in the world. So that's one comment. The second comment I would make is that under design, construct and maintain contracts, sometimes DCMOs operates as well, built into PPPs, the loss is borne by the team, not the client. The clients in this country are absolutely brilliant at laying off all the risk, 100%, straight at the contractor's feet. They are brutal, right? No question, they're brutal. So what happens then is the poor contractor who finds himself, number one, having to have made a representation to the client that all the client's documents were perfect under the Trade Practices Act, so the client walks away from any liability or responsibility, then turns around and looks to the rest of the team to cover it. And that makes for a highly difficult industry to work in. And I would make the suggestion that the losses incurred in the DCM type environment equal 100% of the PI premiums paid by this country, consultants in this country. It's a very difficult place to be. And some of you will know a number of our major contractors have actually gone to the trouble of taking up the value of the claim against the consultant on their balance sheet and reporting it to shareholders, even before it's got to the courts. So we have a very competitive and difficult environment here. I think it's unusual in the world. I don't think it's that common. And it has been made extremely difficult over many years. Now, the consultants here, the big ones in particular, have become extremely adept at managing these risks. So they're very, very strong on how to deal with it. And even though most of the claims get settled for legal fees and things like this, and very few of them actually get to full damages against a consultant, the reality is it's a terribly expensive business. And Michael will tell you these cases go on for 10 years. And that destroys careers and causes all sorts of issues and difficulties and challenge. So I have, I guess, lived in that environment for 20 years of my career. And I have certain nicknames which relate to my ability to litigate. You need to become very, very good at it if you want to play in this space. And these onerous terms, and that's what we describe them as here, I can recognise them at the drop of a hat. There are hundreds of them now built into every one of these bespoke contracts, and they're lethal. Any one of them could take you out. You have to be able to manage them as a whole. So it's an extremely complex piece, and I hope our experience never finds its way to the rest of the world. It's a bad place.
Right. Thanks very much, Tony. I think that's very worrying. I'm just at this point in time, I'm just going to checkmate. We've got Luis, who is our vice president. Luis, can you get your pen and paper ready? Because I'm going to ask you to sort of bring us to a closure at a point in time, Luis. So just I've got one more question that I'm going to put across to the panelists each. I'm going to start off from Nora. Nora, you set out the paper, the first two papers and the three papers, and you've said the last three papers will be issued very soon. Is there any word of advice you want to give across to those who are listening, whether they're firm, whether they're client, or whether they're actually consultant, or people who are MA, as Nicole said, any advice you want to give, one sentence advice you want to give?
One sentence. I'll give a few sentences, but I'll try to be quick. I would reiterate that context is key, but built into this is really, really risk management. Make sure you have good corporate governance in place. And these briefing notes are not intended to be read in isolation, but they're part of an arsenal of information that you can draw from. It is important to make sure that you do, pay attention to local laws, customs. I think the DUNA has stressed that a few times, and we cannot stress it enough. So the committee is there to provide risk management advice and to provide that information, but obviously these have to be taken into context and speak to your local MAs as well. But I hope you do find it useful.
Okay, thank you for more than one sentence. I think that's quite good. Michael, I know you can keep it short and sharp, but if you need to have a couple, you are welcome to do so. What's your advice?
Echoing what people said, different insurance applies differently in different countries. Do not assume that everything is homogenous and the same. To Tony's point, the Consumer Act, Trade Practices Act has meant that a number of insurers will not insure in Australia because the law's gone too far. Yet there are other parts of the world which are less litigious, so insurers will insure, and maybe for even broader obligations beyond reasonable skin and care. The Middle East is a very good example. So just don't assume everything's the same and speak to your own insurance advisor.
Okay, don't take anything for granted and talk to your advisor. Can I bring Nicole in, please? Nicole, what's your advice? And I'm asking for advice here. This is not just purely from HS2, from your wealth of experience, Nicole.
Absolutely. So, I mean, if I go back many years ago, and I won't say who my employer was when I was in this particular role, because that would be telling tales, but I remember giving some internal training, and the team that I was training genuinely believed that indemnities and insurance were the same thing. Now, clearly, i.e., if you read an indemnity clause in a contract, that means your insurance would cover it, that they were one and the same, which clearly isn't right. So I think my advice is know what you don't know. The resources that FIDIC is delivering to you all in these guidance notes will tell you what you don't know. And just to repeat advice that Michael just gave, go and get inputs from people who do. You're all empowered, or your organizations are empowered to make an informed decision about what risks they are prepared or not to take on. But if you stumble into that predicament, then that's very different from going into that predicament with your eyes fully open. So, understand that these three topics, they're super important to what your risk exposure on any particular project really is.
Thank you very much, Nicole. Can I bring the donor in? You talk about jurisdiction, understanding different play. Can we add any more to that?
I would add, Nelson, just to mention again fair and balanced risk allocation, because what is not good for the project is not good for the parties. So if you try to push more risk to the other party, and if it's not beneficial for the project, that does not bring the successful outcome for the project, and the both parties then are not happy with it. So just maintain fair and balanced risk allocation with what I would add, what FIDIC is, I think, preaching for many years.
Thank you very much. Nicola, your view, your closing statement, Nicola.
Thanks, Nelson. Just to build on what Dadunda just said there, really, thank you for that. I think a call out for the MAs listening today is that we've heard from the panelists just how many conflicting interests there are in delivering projects. But what unites us typically is wanting to deliver for the ultimate end user. Typically, that might be the community, our communities at large, and essentially building a better world for us all and our users. So let's align around that, and let's go back to thinking about how we create contracts that create a collaborative environment where risks can be genuinely assessed and identified at the beginning of projects, and appropriately, therefore, shared and allocated, rather than the more siloed approach, which we're seeing too much of, which drives people apart from each other and drives people into disputation. But as MAs, if we can unite and call for more collaborative forms of contract, and I know this is something that FIDIC is working on, in developing a collaborative form of contract, which is a very exciting project, then that's something that will hopefully start to remove some of the challenging issues that we've been tackling today. Thank you.
Very much, Nicola. Thanks a lot. Can I bring Chloe in just to give us the last person to speak before I hand it over?
Definitely. So I think just to build on what Nicola and the other panelists have said, I think there's so many different competing interests in the market at the minute. I think it's really important to try and educate the client, the ultimate client, as much as you can, to use your expert team, your contractors and your consultants to try and do that, and to make sure you know what you're agreeing to when it comes to contracts. And if there's something that you don't quite understand in there, try and get as much clarity on that as possible before you sign the dotted line.
Thank you very much. Short and sweet. So can I bring our Vice President in, who has been going through? Before I bring him in, there's a question that we need to deal with. So as Louise, can you get your pen and paper ready? Because I would like you to summarize how we finish up. But the question is, in your experience, what is the most commonly used contract form for consultant appointed? Now, can we have the question and the options? Is it FIDIC Client Consultant Model Service Agreement, the White Book, standard form of issue by another organization, a national form of contract, or a bespoke? So you have four options: FIDIC style, a standard one in your country or your organization, or a national one, or a bespoke one. Time to vote. It'd be interesting to get the feedback from the industry. I think I understand we have close to 400 or 500 people online at a point in time. What is the feedback? Do we have the answer, Liz? Right, we got 29% for FIDIC contract and bespoke 30%, which tells me that the need for standard contract, there's more advocacy that needs to be done. Thank you very much for that. At this point in time, can I bring Louise in? Louise? The floor is yours, Vice President of FIDIC from Spain, with a big entity operation. Can you just summarize for us on all the conversation that we've had so far? Louise, please.
Thank you very much, Nelson. Hello, everybody. It's quite difficult to make a summary of this brilliant session. Well, I believe that once again, FIDIC is right choosing the topic of this webinar. Few things in these moments of relative prosperity in our industry concern our company managers more than risk management and how to protect their companies from the increasing number of risk. Although it is true that the protection from risk due to own or unexpected error has always been of vital importance, The events in recent years have increased the need of protection. Both the pandemic and the consequences of the recent invasion of Ukraine have generated some double effects. The first is that the application of contracts has been subject to multiple difficulties in interpretation. And the second, and in my opinion is the worst, is that an incredible increase in claims and litigations took place. And not only with our normal and standard clients, but even with our regular peers and partners. This is why I find that the work carried out by the Risk, Liability and Quality Committee of FIDIC is so important and this webinar so timely. But there is another factor that some of the speakers were talking about that I don't want to fail to highlight and value. Engineering companies that are used to work in countries with civil law, mainly Roman and Napoleonic law, like in Spain, like in my country, and that want to work in regions with common law, face to an endless number of problems that are totally outside of our normal practice and culture. In our countries, concepts as a standard of care or fitness for purpose are practically unknown. Likewise, in our countries with civil law, the liability limits do not usually exceed the amount of our contracts, and the insurance policies of our companies in our countries do not normally cover significant liabilities. The 5 documents that this Risk and Liability Committee has produced in the last year, not only indicate the best practices to limit the risk in contract management, but also help to understand a known risk for many companies of our in countries, mostly of them belonging to small MAs, which are the ones that most need help. Obviously, I don't want to finish without congratulating all our panelists for the brilliant intervention. Your comments, experiences, and advice will help us a lot. I want to tell you that listening to you, how difficult it is to manage the risk in countries like US, UK, Australia. My admiration for you is growing and growing. How are you able to survive with such a market conditions? Congratulations, not only for your intervention in the webinar, for your capability to manage your companies. That's all. Thanks again. And I'm back to you, Nelson.
Thanks very much, Luis. I was going to bring the president in. I am going to bring the president, but he's got one sentence to close out. So, Tony, before I wrap up, we are 2 minutes late. Any particular message as short as we can before we wrap up, Tony?
We're 2 minutes late.
We're 2 minutes late, yes.
So thank you everybody on the panel and for those who've been present at this the webinar. I do think it's a serious body of work ahead of us to undertake, and we will continue down this path through our committees. I guess we need to fundamentally look at how to maintain effective and efficient risk management without it becoming punitive on any of the parties. So that to me is got to be an objective. We've got to make it fair and reasonable, but it's got to be fair and reasonable for all the parties. And that means a collaborative effort, I think, to improve the situation that we're currently facing. So thank you very much, everybody. And thank you to the speakers, especially. Well,
thanks very much, Tony. Let me just put it this way to try and wrap up. My job now is to close the whole lot. A lot has been said, but I did start it by saying this webinar is delivered by the FIDIC Risk, Liability and Quality Committee. And I want to say a massive thank you to all of you who are member of that particular committee for producing excellent, briefing note. Nora started off by making reference to the 2 briefing note and the 3-1, which is yet to be released. And then we talked about all this, and a lot of subjects being covered. Tony summarized it very quickly, and also Luis covered it. I think the message that I pick up from this is we want to find an efficient and effective means of risk management. And there is an issue about which country and jurisdiction you are operating on. It's very important. If you're not serving the market, don't go to the market. Don't be too adventurous. If you don't have your capability in-house, you don't have the appetite, don't go for it. I also hear loud and clear that, yes, of course, we may produce this document for the MA primary. It's good information. Second, it should help you to talk to your members, to help them to negotiate when they say they are talking to their client. This is a good document, it's a good reference, it's an international one. But I also understand the need to use for advocacy. But more important is what that we need to find a collaborative one. Now, I can tell you, in my experience, where I sit on 18 billion project yet to be completed in UK, and the best known so-called collaborative document gave a lot of commotion, 3 billion extra. I don't need to mention the project, but you will know where I'm coming from. You may talk about collaboration. Collaboration is truly when both parties have a genuine agenda to deliver the project with one goal in mind. Whereas when you go into the market, collaborative document, if it's badly used, you can lead to delay, delay, and construction issue. So my view on it is be careful when you use the word collaboration. What does it truly mean? Yes, I know FIDIC is developing a document, and when that document is out, we'll be talking about it. I want to use this opportunity to thank all the panelists, from Nora to talk about Michael Elp, and talk about Nicole, and also Nicola Doduna, and also Chloe, for your input. It's been absolutely fantastic. Thank you very much. We gave a short notice shortly after the Easter break, and you came in and you deliver. I'm extremely pleased. I want to say thank you to all the staff of FIDIC behind the scene. You've come back from your holiday and back into the action. And I'm really pleased that we had close to 400 and something people online. Thank you very much for your input. Without further ado, I'm just going to go on to just give you some of the headline of what's coming through. We have the FIDIC Contract Users Conference coming up in May, and that will cover Middle East and Africa. We cover Latin America and Asia and Australasia. So please have the date in your diary and register. Next one is we are going to hold the FIDIC conference in Geneva this year. We are bold and being bold about it. We haven't had a physical conference for the last 2 years. We need to get together. Hopefully the world is getting better. So we'll encourage you guys, so please, wherever you are, to register as soon as possible. On top of that, we have our award coming up, either the Future Leaders Award or the Project Award or the Member Association Award, opportunity to showcase what is happening in your country, your continent. Please go on the FIDIC website and have a look at it. And finally, just really to try and wrap up, massive thank you to Tony Barry and Luis for giving us the time to have your view on the subject. And for those who doesn't know, we need to be careful, just to make sure that, listen, when we pitch our activity next time, we don't run too late. This time we are slightly a bit late. The subject is important, and please pardon us for being a bit late. So thank you very much. Wherever you are, please stay safe and take care. God bless. Bye. Thank you very much. Thank you.